Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.com as well as StockCharts.com. So, is protecting capital a fool's error? And I'm going to go through some charts in the current market that talk about just the macro setup and then why this market is so hard to make money. And try and show a little bit of the reason it's difficult here. So with that, if you have any questions about the way we operate or think about the markets, feel free to head over to ospreystrategic.org. You can go there, and there's a $7 trial for a 1-month offer if that interests you at all. Again, the whole idea here, I think it's an important place to protect capital. Obviously, I might be alone on that. But for me, really want to make sure that the market backdrop is more positive than it currently is. So let's just start here. So we had the CMT 50th anniversary in New York City, and this is Ralph Akampura, who was one of the founding fathers of the CMT Association, and Bob Pisani from CNBC, and myself. We had a very fun 3 days getting together with everybody and lots of friends that we hadn't seen for a couple of years due to COVID. And last year the meeting was in Washington, D.C. So kind of a mixed group. But this year, because it was the 50th anniversary, they literally brought out all the big guns in the industry, and Tom DeMark won a Lifetime Achievement Award. So people like Steve Cohen and Tom Lee were in the audience, as well as some of Tom's customers from around the world: Hong Kong, Dubai, Singapore, Europe. It was quite a fascinating event. We did go spend an evening on the floor of the New York Stock Exchange, and I found that to be particularly fun. I was there 10 years ago or so, and it was extremely rewarding. I think probably of the 300 people in the room, I probably know at least half of them from attending over the years. So it's quite a fun event for me when I go there. And one of the big things I was hoping to kind of get more resolution on this year was, where do we see this market going? And I couldn't help but be struck by the fact that, some of the people were bullish, but only a quarter of their indicators had flipped to bullish. And some of the people who were very bullish on the market were still negative on the year. And it's that kind of twist that I think makes this market so hard. We're not getting a big breadth thrust like we might have seen out of the 2003 low, or the 2009 low, or even the 2015-16 low. Just not getting anything like that. And the COVID low, I would just call it exceptional, as governments around the world threw money at it. But the big thing here, I think, is just trying to figure out, is there more capital to be made, or are we more interested in protecting our capital? And again, if you miss out on a couple of weeks of rally, have you missed, or have you just been a little too careful? And so it's quite a balancing act. And I'm going to try and explain some of that today. So when I look at the market, so this is on Tuesday, right around 10:30 a.m. Eastern time. So the market's been open for a little more than an hour. What we see here, this is the 60-minute chart, and the S&P's down 1% and the Nasdaq's down 0.7%. But we're up around prior highs. And again, briefly, we broke through the prior highs on Friday, and a little bit of follow through on Monday, and now we're pulling back a little bit. We can see a bit of lower highs in momentum as we try to take out the prior high here. So again, 60-minute chart. So you've got a higher high in price, but a lower high in momentum. So we would call that negative divergence. Now, that's not too severe. You can have that on a 60-minute chart at any time. But when we go to the daily chart, and I want to focus here. So again, this is daily view. I'm just going to scroll up a bit more to get my information on there. One of the big things we're looking for here is, does the market have the ability to continue to go higher? And again, it's the old sell in May rule, and April's the best month of the year, and whatever. I can't think of all of the goofy seasonality things we've got going on. But when the market's been going up with the Fed support for 13 or 14 years, yeah, probably April's always a good month, and January's always a good month, and February's always a good month. We don't have that right here, so we're working a little bit harder to figure out the market. So here's the S&P 500, and again, the February highs we ran up to, and then we sold all the way down. Started to rally in early March. Then we had the Silicon Valley Bank failure. And then again, that would be bearish news, but no, it's not bearish news in a stock market. So we rally off the lows knowing banks are failing, and we make a high, a low, a higher high, a higher low, and now a higher high. So it still looks bullish. And then you're testing the prior high here, breakout. This does look a little bit like a failed breakout for now. Let's not put too much weight on it. But I think, again, part of the problem is we've got this lower high in momentum, and we also have a lower high on the daily chart in momentum here. And if you look across the charts, at that February high, we had the same sort of thing where we had a high, spent a little bit of time up there, and then we kind of have a follow-through rally and then fail. It seems to me like that's kind of what we're setting up here. So the momentum indicators are kind of rolling over, and it's too early to say. We have the Fed on Wednesday and Apple on Thursday, and so we'll see how that goes. Of course, we had Microsoft last week, and they rocked it out of the park. Meta also had a great week. Amazon came out with the stock was up 12% on the earnings, and then by the time the conversation had ended on the conference call, they were down to flat or a little bit down from there. So then when we go to the weekly charts, let's just talk about where we are. So we're roughly where we were a year ago in the markets. We haven't really we haven't been able to break through this 4,100 level on the S&P 500 or 4,200 level. And then on the S&P, on the SPY, again, the chart's playing out sideways for the most part. And it's really been, since February, we haven't had a lot of big bullish moves. Again, we came off the banking low, and then these 5 or 6 weeks here, the market's been trying to grind higher, but hasn't really made any ground. So when we add all this up, one of the reasons that I'm more, I don't know if negative is the right word, or if I'm more careful with my capital here, is I see a lot of weakness underneath. And a few weeks ago, I penned an article on the StockCharts website, and it was about how oil as an economic indicator, and even though the Saudis keep taking oil off the market, oil's having trouble holding a breakout. We have lots of oil stocks trying to break out, and they're stalled at prior highs, much like the market is here. So when I look through what's going on in the markets, I'm trying to find the opportunities or the areas of strength, and I've got some different chart lists to look at with you today. And again, I'm not trying to be bullish or bearish. I'm trying to follow the data and be whatever the data tells me. And I think once we get through the data, hopefully you'll agree with me that it's a pretty mixed picture and very difficult for any clear trend here. So this chart is one I show my clients every week, and maybe I'll just change the width here to 1400. And the idea being, this chart is the emerging market leadership. And one of the things I think is pretty interesting about it is that this full stochastic, basically for all of the bear market, it rolled over at the 50 level every time. And then once October came, we rallied out of the lows, and we actually got above 50 for the first time when we rallied up. And then we pulled down, and now we've rolled back over. And so let's just use this as one chart that might be suggesting that we're still not into the next wave of the big bull market. And again, one chart doesn't really matter. It's not the S&P 500, so who cares? But the big thing we're seeing here is the PPO momentum indicator is still declining, very close to being below zero. And that's not a really strong look. So As this chart continues, and again, this chart includes China. So what we're watching for here is can we start to see growth and demand pick up in China, and that might actually help us. Now, I have this same chart ex-China, and let me just shrink that down a bit. And what you see here is the chart's grinding sideways. PPO momentum indicators pretty much the same here, a little bit more strength. But again, we're still at a resistance level. It's rolling over, and you can see ex-China, this chart wasn't quite as clear as that prior version. But to me, there's still a lack of demand showing up from the rest of the world. And of course, Europe's got its own issues trying to pay for relatively expensive energy. And so that cuts down on their actual cash flow for what we would call discretionary spending. So when I go to the markets and I want to think about this broadly, I'm looking for different areas to try and see something happening. So I've mentioned energy is a good one, and consumer discretionary is another one where we could look. And then we had the whole automobile area trying to move into the electric vehicles, and we had Polestar, Rivian, Lucid, couple of names are escaping me right now, Nikola. But what we're seeing on those charts is a pretty weak picture. That whole area still seems to be pointing lower with a little bit of trauma. One of the areas that's been a bright spot this year has been AI, so we can go and look at some of those stocks. And then we've also had crypto that's been relatively positive. It's been, in terms of a percentage move, it's been the strongest mover outside the S&P 500 and really pushing forward as a risk-on indicator. It's been choppy of late, but it's still trying to push higher. And then we have, some other groupings of stocks. We might have the Dow 30 or the NASDAQ 100 or the S&P 500. And when you go look at the Dow 30 and, Microsoft, obviously a very strong chart, Apple still a strong chart. When we go look at the rest of them, they're quite different. And even if I go to this, banking, we've been talking about how the big banks are performing so well and the regional banks are not. And I just found this chart quite surprising. So this is JPMorgan, again, the day after they bought, I forgot which one they bought now. It's just in the back of my mind, Republic Bank. And what we see here is they broke out on the news and then they're slipping down. But here's Bank of America. It made its highs 2 weeks ago, and when we go look at the chart, the stock actually topped in November and is making lower highs and lower lows. And again, this is one of the big banks. So why is this big bank sliding so hard when we compare it to JPMorgan? We could go to Citigroup and Wells Fargo and look at the charts. And again, they don't look that healthy to me. Citigroup, you haven't made any real money going all the way back to last summer. And the same thing here's, September 1st for Wells Fargo, and we're below that level. So even though they're the large banks or the systemically important banks, they still don't look that healthy. Now, JPMorgan looks like a king amongst the peasants in terms of the chart shape. Everything else isn't quite as bright as the JPMorgan. And of course, JPMorgan just, happens to be dominant in the S&P 500 and, some of these other indexes. So as we look across the whole thing, I'm trying to get a picture of what's clear. And again, the big banks are holding up well. Well, that chart doesn't look like it's holding up well to me. We made our highs roughly February 1st, and we've been making lower highs since. We briefly broke to 3-week lows here on Tuesday morning as the Fed's going to announce our PPOs are rolling over and going below zero. That's typically not a good place to be long the stock on a short-term basis. And when we look at the weekly chart, this 35.25 low here is lower than the 35.83. So we're almost at 2-year lows on Wells Fargo. And, we don't really want to talk about that. We only want to talk about the JPMorgan one because they were the one doing the buying. So it's a very difficult picture, and I want to try and clarify that as we go forward. So this is artificial intelligence stocks, one of the hotter areas of the market. And again, I've just put a whole bunch of charts in a list, and we could just quickly scroll through them. These are weekly. So again, this is roughly 18 months, 21 months of data. And what you see here is they made their highs in February, making a lower high. This one made its high toward the end of March, but quickly gave it back and is off about 20%. And here's Lattice Semiconductor, again, made its highs the end of March, and by the end of April here, we're down 20%. And our momentum indicators are rolling over. A lot of our trend lines are starting to break here. So these are at least clues things aren't great. And C3 AI has been one of the real big movers. Again, it was $10, went to 30, so 200% gain. Started to thrust at the end of the first quarter and has now pulled down, giving back, roughly a third of what it had going. Now, NVIDIA continues to be a chart heading up to the top right, and everybody loves it, and they're all falling all over to buy more shares of it. And yesterday it broke out to a higher high, so that was pretty solid. When I look at some of these other charts, analog devices, again, going back to mid-February, probably haven't made any real money. ON Semiconductor, this chart's a little bit better, at least with the recent thrust this week. It's only Tuesday and it's pushing up quite nicely. But again, since February, it's been a little bit of a hard investment. And then we've got Fortinet. This one ran up and pulled back. The charts still look good, but it's this $70 to $62 so quickly, roughly a 10% drop, even while the overall stock market is making higher highs. So Cerence and Ceridian, Global Foundry, that chart's pretty much sideways, no real money to be made there. This chart, you're back to where you were, August of last year, you're not making any real money. Ultrex, this one's kind of fallen out of bed. So, and these are in no particular sort order, but I think the biggest thing for me is when I look at these charts, there's very few that are behaving like NVIDIA, and Cadence is one that's held up pretty well. Here's Meta that's been doing okay. Of course, Microsoft has been pretty solid as well, but here's Cloudflare holding up nicely and then literally giving it all back. So when I just quickly glance through these charts, and I'm not trying to, are they above or below the 20-day moving average, that kind of thing, just in general. Here's Workday. It's been hard to make money since mid-February. Just the chart's gone sideways as we stand here in May. So Lockheed Martin, this was one of the better ones. It's rolling over as well. Ambarella, been sliding since February. And again, this was one of the hotter areas of the market. So, we could keep scrolling through, but I think you get the idea. So this is one of the areas that's been hot and been trying to get going. And again, there's a few stocks still making higher highs this week. But the real question is, when you look across the group, it's been very difficult to pick them. And when they do give up, they've been, making big moves down relatively quickly, making it a lot harder to make any real money. So that, I'll call it as the bright spot of what everybody's been talking about for the first and most of the second quarter here, has been the artificial intelligence. I don't have any real compelling reason to kind of hang on to that industry group. Right now, it's not like all the charts are starting to trend higher or something. So let's go to energy. And again, I think of energy as an economic indicator. So if it's not going to hold up, it tells me the economy is slowing, and we've already taken 3 million barrels a day off the market, but somehow this market is unable to kind of keep holding up. Now I've got some Canadian stocks in here, some US stocks in here. The Canadian ones are, there's some real interesting opportunities coming in Canada. There's a new pipeline to the West Coast that should tighten the spread between West Texas and Western Canada select crude. Expected to tighten by roughly $10 a barrel, so that would improve a lot of the financial metrics for a lot of the oil companies in Canada. But looking at these charts, again, this chart topped out in November. ARLP topped out, September of last year. ARC Resources, really strong looking stock. You'd have thought it had been great, but it topped out in May of last year, and now it's below its 50-week moving average, just kind of rolling down. Athabasca has been a real bright spot. It's been trying to make out to a new high, not really working. Here's BKR rolling over. Here's Amoco just this week dropping down hard from trying to break out to new highs. Canadian Natural Resources, Canada's largest oil company, is just kind of stuck around prior highs. And don't get me wrong, I still like the stock, but I want the stock to be going up. And the issue is we're having trouble just getting through prior highs. So that tells me there's an issue with demand. And here's Crescent Point, a smaller one. Cenovus, I think they do around 1 million barrels a day. And this one's leaning down pretty hard. Here's Chevron. Again, this looks more like a topping structure to me, and you're starting to fall below the 50-week moving average. Now, just when I look across these charts, there's not a lot of great ones, and that's the whole thing. Why is energy slipping so hard? So just, here's FANG. This has been a pretty popular name. It just can't really get going. Freehold Royalties. This one pays huge royalty dividends, and it's slipping. Here's Halliburton, basically made its highs around the beginning of the year and is sliding back down. Here's Hess Corp, same thing. Anyway, when I look through these charts, I don't see anything that's really compelling to buy yet. And obviously ExxonMobil is one of the strongest ones. This Journey Energy chart, nothing wrong with it. The CNQ chart, nothing wrong with it. It's just the bigger issue. Why aren't all these charts going higher if we're so short of oil? And here's Cheniere Energy, so you're into the natural gas, and I don't know if you've looked at a natural gas chart, but it was literally 12 and went to 2, down into the ones briefly, but that's a pretty big dramatic shift, and maybe it'll base for 6 months and then we start to see some climb out of the hole. But right now, again, if you're looking for some of these charts to break out, they're just struggling to hold the breakout. Okay, so let's go to consumer discretionary, and again, we'll just jump in here. Now, one of the areas that is doing really well is gambling lately. That area has really started to pick up. So that's one bright spot that I do see. Here's Airbnb. You'd think with all the travel going on, this one should be doing great. Here's Amazon, just stuck below its 50 week. And, there's a few charts, but it's very few charts that are living in the top right-hand corner. And so, BJ's Wholesale Club, nothing wrong with it, but you bought it in February and you're probably about the same price. Booking, looking much better. Here's some gaming stocks. These are looking good. But, here's Chewy. They have huge margins in the pet business, struggling a bit. And then you got Chipotle, and it's literally blowing the roof off, which is nice. And here's Coupang. Again, sideways for roughly a year, so kind of hard to own. Crocs has been a nice chart, briefly broke out to new highs, pulled back, and now you're at the same level you were at in January. Caesars hasn't really followed the gambling move higher. Decker's Outdoor, that's been a great chart, just continues to wobble to the upside. DraftKings trying to break out of this big year-long base, so that looks pretty good. Can it hold it? Dick's Sporting Good working its way higher. But when I look at most of these charts, they're just sideways and not really giving us that ramp that we want to see. And there are a few, I don't doubt that at all. I think the bigger issue is just trying to pick the few that are working rather than being trapped in whatever. Let's say this Hyatt Hotels, you buy it on the breakout, runs up, pulls back, runs up, and you're back to where you were in February. Home Depot, keep hearing about how the home business is doing so great. So why isn't this Home Depot chart? And that's a really good question. The PPO is trying to trend higher here, but it's right below zero, and I wouldn't want to see it get any weaker. So when I look, again, going through this chart list, they're not awful. They're just not breaking out as a group, and we're not really seeing the move into consumer discretionary to start the next bull market. And here's Lowe's, again, just jogging sideways. But here's Lululemon pushing above prior resistance. Not awful, just very difficult. So here's another gambling one, Las Vegas Sands. Here's Marriott trying to break out. So you see that Booking.com chart breaking to the highs, and yet these hotel charts keep trying and trying, but they haven't really gone anywhere. When I look across consumer discretionary, I don't get any better feel. And when I go look at something like a Coinbase or whatever, okay, so this is a little bit of crypto. How come that chart's not doing great? And there's another one called HUT Mining. And, this is a chart I'd be expecting to kind of follow Bitcoin a lot higher, and yet it hasn't really done that. And then we can go just crypto in general. I'm just at the crypto button here, and here's Bitcoin on the day trying to get a bounce. But we're chopping along really since mid-March, and don't get me wrong, it's continuing higher. At least it's up in the top right-hand corner, but pretty wild swinging trades lately compared to the quiet period we had back in November, December. So then let's go talk about the Dow, and this chart, it's okay. So we're having a little bit of a pullback. We're down 1.3% on Tuesday. But, we're at resistance. We're just trying to push to the upside. Why can't we get going? So when I continue to look at these charts, I just don't get the follow through that I would expect if we were going to be entering a next big bull market. So let's just hit update. This is the Dow 30 stocks, so we can quickly go through all of these, but Apple's holding up, Amgen, American Express, not so much, Boeing sideways, Caterpillar down, CRM, Salesforce.com holding up nicely. So I'd say 2 of these, maybe even Boeing 3, are looking okay. Cisco pulling back, Chevron pulling back, Disney pulling back, all those 3 are pulling back. Honeywell's trying to rally a little bit, but still well below December's highs. And Intel briefly tried to push up and is now pulling back. So out of this, what have we got? 3, here's JPMorgan looking okay. Here's Coca-Cola, here's McDonald's 5, here's Merck 6, Microsoft 7, Nike 8, Procter & Gamble 9, and I don't know, Visa maybe 10. So when I look across the board, and Walmart 11, so 11 out of 30. And again, it's that kind of challenging market, trying to figure out which direction this wants to go. So for me, I think the bigger issue is just trying to protect capital and stay on the right side of the market. Now, some people might say, well, that's just too cautious. I just want to be invested and get the dividends or whatever. But my problem is some of those other charts I showed you earlier literally pulled back so hard, so fast. You lost 20% trying to pick up a 3% dividend. And I'm just going to end here with my Schnell strength indexes, and what they continue to show is we made our highs back at the beginning of April, and we just keep making lower highs, and this just tries to get a feel for trends within the industry groups and some other charts I monitor. But the bottom line is we just don't have the upthrust, and again, when you start to lose this 50% level, it's a good place to be cautious. That's where I'm at. The market seems like it's just burdened to try and go higher. So with that, thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recording on StockCharts TV YouTube page. Thanks, everybody. Bye-bye.